Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I am India's World Cup winning supporter, Yatin Mota.
All of us here are supporting Yatin. Just because you're wearing the jersey doesn't mean
I
that
thought
we are
that you are dressed up like an Australian sailor. So, I thought that you might be supporting Australia.
No, of course not. I'm just wearing white, which is the color of peace. But of course, I want India to win.
Okay, I thought that you want to draw.
If we lift the World Cup, of course, we'll be bringing it back home after 12 long years. And this is not the first time that India will be meeting Australia in the final. So let's hope this time things go our way, given the fact that we have maintained a winning streak. 10 straight matches we have won. And of course, now we are hoping for a very good battle on Sunday, a very entertaining one at that, and of course we want to bring the cup back home, so we'll be watching out for that. But of course, Nifty also has been on a winning streak, given the fact that on a weekly basis we have gained somewhere around 2% or thereabouts. Even though for today, the weakness in the Nifty Bank Index and banking and NBFC shares have dragged the Nifty below that 19,750 mark, but just a shade below that mark. So we have ended the week above 19,700. I think that's a big thing, because earlier when we started the week, we were somewhere around 19,400 to 500, and we were hoping to reclaim that 19,600 mark, but we have ended above that crucial level of 19,700 for the week. Broader markets today also they held up, and on a weekly basis the Nifty small cap index is up nearly 3%. You have the likes of Nifty IT as well as Realty. These two pockets, Yatin, each index has gained nearly 5% for the week. So lots of buying interest around IT, of course, given the fact that there are hopes that interest rates will head lower in the US, and that the Fed has come to the end of its rate hiking campaign. So on the back of that, we've seen a lot of buying interest when it comes to IT. Even today, IT, I think today it was under a spot of bother, but for the week it has gained 5% or thereabouts. But the banking index was under pressure, Yatin, another 1.5% cut coming in. Of course, we had the RBI's clampdown on personal and consumer loans that led to weakness across the banking space. So if you look at the PSU Banking Index and the Nifty Bank Index, both of them were down somewhere around 1 to 2%. But Yatin, what are the brokerages saying? What are the kind of impact we could see on some of these banks and financial institutions?
The whole host of brokerages which really cover banking well and the NBFC space well were of the joint opinion and a consensus that this risk management tool of RBI probably will be detrimental for the banking sector as a whole, because this will put brakes on the growth which was quite disproportionate in the personal loan segment, which were unsecured in nature. So there are three impacts which the brokerages have lined up, and I'll just talk about the takeaways. Number one is the impact on your capital adequacy, because your tier 1 capital needs to be set aside drastically higher than before, because the risk weight is now increased from 100% to 125%. That will eat away the capital, especially of the smaller PSU banks. So the banks which were maintaining healthy capital adequacy ratio should be able to absorb it, the larger ones, especially in the private sector. But yes, the smaller banks, the mid-cap banks probably would have to take more capital off, given the fact that they have a substantial share in the unsecured personal loan market, or their exposure to the NBFC lending. Number one. Number two, the overall growth which was coming in from the personal loan segment, which was unsecured, that will see a massive slowdown in the coming quarters. Obviously, the good part is that the festive season is off, but still a good amount of growth was coming in from the segment. So the overall loan growth will get slightly diluted, given the fact that there could be some slowdown in the overall lending power of these NBFCs and banks. And number three, and the most important thing, is the cost of capital. Now, a lot of banks lend to NBFCs, but now the risk weightage is higher. So the cost of funds for NBFCs should move higher, and the lending capacity of the banks will move lower. So this will push the cost of funds up, and the lending rates also slightly higher in this particular segment of personal loan segment. So I think these are the three key takeaways when it comes to the impact of the RBI circular, which has come in for the personal loan segment, which is unsecured in nature. But the part is that microfinance, education loans and housing loans are kept away from this particular segment.
Yeah, that was all about the banking space and the NBFC space. Of course, we saw the impact coming in today because the announcement of course came in post market hours yesterday. But let's also talk about some of the other sectoral movers today. So FMCG, pharma and autos, they were among the top sectoral gainers. And if you look at some of the nifty gainers, individual names, some of these life insurance companies like SBI Life, HDFC Life did well. You had Apollo Hospitals, you had the likes of L&T and Hero Moto, Yatin. That stock is once again among the top nifty gainers. Yesterday also that stock gained somewhere around 3% or thereabouts, and today as well strong gains coming in there. On the losing end, of course, most of these banking names starting with SBI, you had Axis Bank, ICICI Bank, all of these on the losing end. Bajaj Finance, of course, this stock has been on the losing end for quite some time now, Yatin, today as well. On the impact of the RBI circular. But Yatin, talk about some of the mid-cap movers now.
So, insurance companies were doing well. In fact, if you look at ICICI Lombard, HDFC Life, SBI Life, the general insurance players were doing well. In fact, if you look at the Nifty 50 with the top gainers of HDFC Life and SBI Life, apart from that, we had the mid-cap end of the market in which Tata Investments surged nearly 18%. And was up, almost a full 20% in the last 30 minutes of trade. Varroc Engineering, Saregama, Nykaa, Aircon were the other stocks which were gaining in traction in trade. In fact, most of these railway stocks were doing well for the trade today.
Right, railway was doing well as a pocket, and paints as a pocket was also doing well. In fact, Asian Paints is one of the stocks that is on my radar this afternoon. Of course, we saw crude prices coming off quite significantly. Last night, we saw crude prices slump 5%, Brent around that $77 per barrel mark, and of course, major beneficiaries turn out to be the paint stocks, given the fact that it directly impacts these paint manufacturers, as many of these raw materials used in paints are petroleum based, right? In fact, aside of this crude tailwind, there's another report that has come out on Asian Paints. Macquarie has come out with an outperform rating on the stock, target price at somewhere around 3,800 rupees per share. Now, Macquarie says that the company has announced a marginal 1% cut, price cut effective 1st of November. The price cut is across its decorative paint segment portfolio, rather, with 2 rupees per litre cut across enamels. You have 3 to 4 rupee per litre cut coming in across economy emulsions, as well as 10 rupee per litre reduction across waterproofing. The price cuts, Macquarie says, suggest that there is some bit of clarity as to where input costs are heading going forward, and coupled with the crude tailwind that is emerging, looks like profitability could be aided when you look at the third quarter. Second quarter numbers were pretty okay, but volume growth had disappointed on the back of a delayed festive season. Now, brokerages believe that the impact of festive season will be felt in the third quarter. So volumes are expected to pick up, and there's this input cost tailwind coming in. So all in all, third quarter expected to be pretty strong for Asian Paints. If you look at the stock, I think the stock has underperformed the Nifty this year. It is up just about 4% or thereabouts. But brokerages do believe that the valuations at the current juncture are fairly appealing. Aside of that, the paints space is going to get interesting going forward, because we have Grasim entering into the paint segment around the fourth quarter of the current fiscal. But Asian Paints, analysts believe remains, what do you call it? It doesn't really, feature in that competition list, because it is the number one player, and Grasim will be looking at, gaining the number 2 slot as per market share, and that makes Berger Paints more vulnerable to competition blues, right? So that way, the paint space looking fairly interesting, but Asian Paints in particular looks like the sentiment towards this stock is turning fairly bullish on the back of the tailwinds that are emerging, and how the third quarter earnings may pan out going forward.
Clearly, and the management also was hopeful that the festive season and the third quarter should bring in some cheers on the volume front. That was about the paint sector, but one sector which is buzzing is the autos, and stocks like Maruti, Hero Motocorp, Bajaj Auto, TVS Motors are at 52-week highs. And let's talk about TVS Motors specifically, because they have been improving their margins consistently. Their export strategy is working, and in order to further boost their export markets, TVS Motors has decided to enter the European markets. Now, if you look at the company's partnership with Emily Frey, which is a key automobile importer in the EU market, they will be setting up a joint venture in which they will be supplying or exporting their two-wheelers to this entity in Europe, and they will take charge of the distribution of TVS products in the EU zone. Now, what really does is that it helps the TVS Motors expand their portfolio without any big capital investment. In fact, TVS Motors plans to take their TVS Torque, Jupiter 125, which is one of the best selling scooters in India, TVS Apache, TVS Apache RTR 310. So even the high end bikes of or rather motorcycles of TVS Motors will be exported to the EU market. And currently if you look at TVS Motors, their export is nearly 25% of the total business. So this pie would probably expand with the new distribution tie-up which they have done for the EU market. So watch out for this one, should be interesting, as most of the Indian companies are looking aggressively to enter the global export market.
Right, and all of these two-wheelers or two-wheeler makers have been in focus. They have been on an upward trajectory.
Yeah.
We have seen the likes of Hero, Eicher, all of these stocks outperform this week as well. In fact, Eicher, Yatin, has rallied nearly 10% this week, and Hero comes a close second, 8% kind of gains coming in this week itself. But on that note, the next stock on my list is Delhivery. Of course, given the fact that we saw a block deal taking place in the counter. Remember, Moneycontrol was the first one to report last evening. In fact, my colleague Ashwin Mohan had broken this story last evening that SoftBank was looking to sell somewhere around 150 million worth of stake in Delhivery via a block deal, and the block deal did take place in the morning. 2.5% stake exchanged hands, worth 747 crore rupees. Stocks were sold at 403 rupees per share, and SoftBank is the likely seller. In fact, if you look at the SoftBank's holding in Delhivery as of September, it held somewhere around 14.5%. In March as well, SoftBank had sold or offloaded somewhere around 3.8% stake in the company, at that point of time you had funds like Saudi Arabian Monetary Authority, SocGen, BNP Paribas, and you had Morgan Stanley. These were some of the buyers in the company. Going forward, in fact, one of the key monitorables will be whether or not SoftBank looks to sell more stake in the company, right? Because SoftBank has also sold stake in Zomato recently. So, that is one monitorable that investors will keep an eye on, whether or not there could be more stake sales going forward. But aside of that, if you look at Delhivery, the number, the second quarter earnings were fairly good, given the fact that the logistics arm had halved its losses despite the kind of delay that we have seen in the festive season this time around, right? And Q3 is expected to be better going forward, given the fact that we will see the seasonality effect and the impact of festive season rollout in the third quarter. And don't forget that Delhivery is one of the favorites of FIIs. They hold somewhere around 65.5% stake in the company, and analyst community generally expect the company to do well going forward. A lot will depend, of course, on the volumes and realizations, and return to profitability, however, remains a long way off. In fact, Elara believes that Delhivery will turn EBITDA positive only by FY25 and PAT positive only by FY27. At a time when there are other players like Zomato who have already turned profitable, this company looks like that path to profitability is still on, and it will take some time to really turn profitable. And on a YTD basis, the stock has gained somewhere around 20% vis-a-vis if you compare it to other new age companies. They have staged a very good comeback. The likes of Zomato, of course, doubling in price. But off late, I think over the last 1 month or so, the stock has lost some bit of mojo. But on a YTD basis, it has gained 20%, and we'll have to see how the third quarter pans out to really see some bit of good kind of gains coming in on this stock.
And with that, it's a wrap on Closing Bell. I'm sure you will be enjoying your weekend, especially the Sunday World Cup finale, wherein
all of us
India
are looking forward to it,
will look to beat Australia and clinch the World Cup again, the third time. And probably this time the PMs of both state, I think from India as well as Australia, should be present at this particular World Cup.
So will you be wearing this jersey on Monday as well if we win?
Let's see. Depends on a lot of things, and if my boss throws a party on Monday, probably I'll wear 2 jerseys.
Get one for me as well, because you can clearly see I don't have one. That's why I'm not wearing today. But yeah, on that note, it's a wrap on this edition of Closing Bell. Of course, we'll be back on Monday with the markets at 8:30 AM. So don't forget to tune in. But till then, you keep watching Moneycontrol for all your other news and updates.